Hello, crypto cowboys. Welcome back to my channel. And today we're going to talk about GameStop and what is a short trade squeeze. Yes, most of you know on my channel, I like to talk about investing. I like to talk about ways to make money. And I usually focus on cryptocurrencies, but I can't ignore this. This thing happening on the equity market, I can't ignore it. People are 5xing, 10xing their money, and it's making me think, maybe equities is an area I need to go into because I really am not in there right now. One of the reasons why I was always more interested in the crypto market than in the equity market is you could 100x your money in the crypto market. In 2017, you could. It's not really happening in 2020, 21 yet, but we still have that feeling we had in 2017. That's why we're still there hanging out. But let's talk about what's going on in the equity market. Most specifically, GameStop. Now, you all may know GameStop. For those of you who are gamers or you have family members who are gamers, that's where they go to buy the games for their Xbox or their PlayStation. Now, because we're all going digital, a lot of people believe that businesses like GameStop are going to go out of business, much in the same way that Blockbuster Videos went out of business when people like Netflix came around and showed you there's another way to consume video. You can do it online, you can do it by DVDs being mailed to your house. So, the story has it that institutional investors, the hedge funds, the big money guys from Wall Street, they shorted the trade. Now, what does shorting the trade mean? Let me give you guys a little background. You can either go long a trade or you can go short a trade. If you hold a long position, that means you're betting the price will go up. If you hold a short position, that means you're betting the price will go down. Now, how do you make money when the price goes up? We all know that one. That's what us retail investors do all the time. You buy the stock, and if the price goes up, let's say you buy the stock at $5, you buy one stock at $5, and that stock goes to $15, and you sell it at 15, you've made $10. That's 15 minus 5. Now, what people who are shorting a stock do, they short a stock that they don't own. So what they do is they borrow a stock, then sell it. So let me give you the example. Let's say I borrow a stock and I sell it for $10, right? So now I've got $10 in cash, but I still owe that guy his stock because I have to give it back to him. But I'm hoping the price will go down, then I'll buy it back. So right now I have $10 that I didn't have before because I borrowed the stock from somebody and I sold it and I got $10. Now the price fell from $10 to $2, and now I buy that stock back for $2. So that means I had $10, I bought it back for $2. Now I have $8, and now I can give that guy back his stock, and I made $8. So I made $8 with the price going down. So the stock price went down, and I made $8. I didn't have to wait for the stock price to go up to make money. I can make money if the stock price goes down by shorting, borrowing a stock from somebody else, selling it, and then buying it back. Now there's also fees and things like that involved, and I'm going to show you when I get to my Excel sheet. So what happened here is the institutional investors, they took hard short position in GameStop. What they believe is GameStop is essentially dead in the water. It's going out of business. It's going the way of Blockbuster. So they took short position in GameStop in hopes to make guaranteed money, right? When it go out of business, they make money. Now, one thing I should point out, in a short position, you are capped on the amount of money you can make, but there is no limit to the amount of losses you can incur. Now, let's go to the Excel sheet and let me show you what I'm talking about here. So, we have the institutional investors in column A and B, and we have the retail investors in column D and E. So let's say their hard to borrow rate is 20%. Now, what do I mean by hard to borrow rate? That is the borrowing rate that you will have for borrowing that person's shares. You're not going to get it for free. You have to pay a fee for borrowing those shares. Now, there is a hard to borrow rate and an easy to borrow rate. Hard to borrow rate is the rate you'll get when there's not a lot of supply of that equity out there. So in this case, hard to borrow rate is what we're going to use. I'm fudging these numbers here, but I'm just going to use it to give you guys kind of an idea of what's happening. So let's say the hard to borrow rate is 20%, right? And let's say these institutional investors, these hedge funds, have shorted the stock. They've sold 30 million shares. And they sold it way back at when the price was $4. So let's go back and look. As you can see, way back 4, 5, 6 months ago, the price of GameStop was $4. So they shorted the trade way back then when it was $4. And the hope is it would go from $4 down to 50 cents or a dollar. But it's going to go down and they're going to make some easy money because it's a company that's going out of business. And they're on all the major channels selling the gloom and doom of this stock so that more people would sell and the price would go down. And as you guys know, what makes a price go up or down? It's simple. If there's more buyers than sellers, the price will go up. If there's more sellers than buyers, the price will go down. It's really the supply and demand. The pressure of more buyers drives the price up. The pressure of more sellers drives the price down, right? So that's what they're trying to do. They go on all these news channels, they sell the gloom, and then people say, "Hey, I don't want to be in this stock." They sell their stock, the price continues to go down, and as the price goes down, they make money. So let's look at my example. So let's say they've shorted 30 million shares. They shorted it at the price of $4, right? So that means they got $120 million when they sold the shares. Now let's look at what happens to their profit as the price shifts. Now, if they're on the news and they're selling the gloom of this stock, people are going to be selling that stock and the price will go down. So let's say they were successful. The price falls to $3. That means they've just made $30 million. Let's say they keep selling the gloom and doom, the price falls to $2. They've just made $60 million. Now, there are fees, so let's say they held the trade for 30 days. All right, so for 30 days, they have a shorting fee of $2 million because they're paying 20% on that, right? So they've made $58 million, right? What if it fell down to $1? They've made $88 million. The most they could make is somewhere around $118 million, right? They're capped, but that's a lot of money, especially if you are sure this stock is about to go out of business and you and your friends have the power to go on the news stations and really sell the gloom and doom of this business. You're making the bet that the price is going to go down. But now here comes Wall Street Bets, this online investment community of retail investors. Now, retail investors are people like you and me. We don't have prime brokers. We can just call up a bank and say, "Hey, make this trade." We don't have the connections in the industry. We don't have the insider knowledge. All we really have is what we read on the internet. And then we can go to an exchange like Robinhood, Charles Schwab, E-Trade, and make our trades. But there's a lot of them on this group, Wall Street Bets, who are reading up on a lot of the information related to this GME deal. And what happened is they all decided to start buying this stock. They believe in the long-term viability of this company. They believe it can turn around, and they all started buying the stock. Let's look at what happens when you buy a stock. So let's look at what happens now. One investor, fine. But now let's say we got 1,000 people who have all invested $10,000, right? Now the price is going up. It's no longer going down. They're able to drive the price up to, let's say, $5. Right? So collectively, they have made $10 million, right? They can keep driving it up. They drive it up to $10. Collectively, they've made $60,000, right? But what if there's like 3,000 people that have jumped in on this, right? They're able to drive the price up to $15. Collectively, they've now made $330 million. But what's happening on the other side? The institutional investors, look at that. They're losing money. If the price jumped from $4 to $10, the institutional investors have just lost $180 million. If they've done this over a 6 months period, which is 180 days, they're also paying a fee of around $12 million. So they're right now in the hole for $192 million. If the price went from $4 to $15, now they're losing money, right? Remember, they're short traders. They want the price to go down, but it has gone up. So they have just lost $330 million. If this happened over 180 days, which is a 6 month period, they're paying fees close to $12 million. So they've lost $342 million. See, they're being squeezed because the more people that are coming in to buy the stock, it's making the price go up. As the price goes up, it's costing the short investors a lot of money. Most of those people who are going short are institutional investors. Where is the price of GME right now? As of the time I'm looking at the video, is around $365. Now, I've made up these numbers, but let's just assume that these institutional investors shorted 30 million shares at $4. That means right now they're in the hole for $10.8 billion, paying fees close to 12 million, right? That's massive. Now, like I said, I don't know how many shares they actually shorted, and I'm just making this up, but I'm giving you an idea how the people who were shorting it are losing big time. And actually, I heard a lot of hedge funds are going out of business. They've had to be bailed out by other hedge funds, right? And this is why. Look at the numbers. So the people who are long right now, they're killing it. The people who are short, which are mostly the institutional investors, they're losing a lot of money. And now people are saying, I watched Jim Cramer the other day, he was saying, the retail investors, you've done very well. You better take your profit. There's a lot of volatility in the market. You better get out, take your profit. Because you don't want to make all this money and then lose it when the price goes down. But what are they really saying? If these retail investors start selling, they'll make profit, right? But the price will go down, and then these institutional investors won't lose all that money. Now, a lot of people are saying the reason why the retail investors are just holding and they don't want to sell is because they want to stick it to the institutional investors. That could be one of them. But I think they're holding because they're just waiting for the institutional investors to cover. Think about it. If the institutional investors cover, the price will go up even higher. Why? Because the institutional investors are going to eventually have to buy 30 million shares worth of GME to close out their short position. That means 30 million shares will be purchased, pushing the price up higher, right? It might go up to 500, maybe. I don't know. I'm not a financial advisor. I'm just telling you what I think. So waiting for the institutional investors to close out their position might actually be the smart move. Because when they close out the position, they're going to buy 30 million shares of the stock, driving the price up. Remember, the more people that buy, the pressure pushes the price up. But what has happened? All the exchanges have stopped allowing people to trade in that stock. They've closed them down. So now you can't sell GME, you can't buy into GME, and I have a problem with that. So what is happening in the background? Like I said, people like us, all we can do is go to the exchange, log in, and make a trade. But the institutional investors, they can call banks directly. They don't have to go to an exchange. They can make calls, talk to brokers, make things happen that we can't. So I have a big problem with this move, and someone should sue about this. They're saying this is manipulation, that the Wall Street Bets group is manipulating. We're all speculating here. Isn't that what trading is all about? That's what trading is all about. A lot of hedge funds actually buy cables that are faster than the cables that you and I use to trade, just so that they can make a trade faster than we do. They're manipulating. They're doing things that we cannot do. And now the one time that some people, some really smart people, have figured out and worked together to actually make money and beat the manipulators at their own game, and now they're shutting people out of the system. I'm not even in this position, by the way, so I don't have a dog in the race. I wish I was. I was over here looking at cryptocurrencies, while over here people are 10xing their money. and I will not make that mistake again. I'm going to start looking over here to really start understanding what's going on. Because one thing I do like about the equity market that the cryptocurrency market just cannot provide is an analysis of the fundamentals, right? When you make a trade in the equities market, you are making an investment in a business that you have to study and understand. You can look at their balance sheets, understand their profitability. There's different sort of intelligent analysis you can do when you invest in the stock market. In the crypto market, it's all technical analysis. That means you're just looking at charts. You're looking at moving averages, Bollinger Bands, relative strength index, ATRs. That's it, And after what I saw happen this last week, it might be time for me to diversify. So stay tuned for that. But what do you guys think about what's going on? Do you think it's fair that everybody's been shut out of the exchanges? What should be done about this? Let me know in the comments. Thanks for watching. Remember to hit the subscribe button, smash that like button if you like this content, and I'll see you next time.